Welcome to the broadcast, where today we are witnessing a powerful and relentless upward march in the precious metals sector. Gold, silver, and platinum are asserting their dominance, confirming a core trading bias that many have held with unwavering patience. For those who have maintained their long positions in gold and silver, this is a moment of profound validation. We now see platinum, a metal that has been lagging, beginning to stir and show signs of catching up to its peers, creating a unified front in the hard money space. The market is looking bright, vibrant, and incredibly strong, reflecting a deep, underlying shift in the financial landscape. Today is not just another day of market movements. It is a significant event day, a day where a long-anticipated target has been met and leveraged profits have been realized. But this is more than just a short-term trading victory. It is a moment to step back and recognize the larger forces at play. We are observing the physical manifestation of a system under immense strain, where the foundational truths of money and value are re-emerging from beneath the cracks of a failing financial architecture. What we are seeing is the market itself beginning to tell a story that has been suppressed for far too long. Let us turn our attention to the silver market, a space that has demanded almost monastic patience from its staunchest supporters. For the silver stackers and investors who have weathered years of suppressed prices and frustrating consolidations, the day of vindication is finally arriving. The chart of silver is painting a picture of such profound technical beauty that it could warm the heart of any market analyst. We are witnessing the formation and breakout of one of the most powerful bullish patterns in technical analysis, a massive, multi-year cup and handle structure. This is a signal that a long period of accumulation is ending, and a new, explosive period of price discovery is beginning. This particular chart pattern is not just a cup and handle. It also forms what is known as an ascending HVF, or harmonic volatility funnel structure. This adds another layer of confirmation to the bullish outlook. The rounded bottom of the cup speaks to a gradual and solid base being built over many years, a slow transfer of the metal from weak hands to strong. The handle represents the final brief consolidation before the price breaks out with significant force. This is the kind of setup that technical traders dream of, as it often precedes moves of incredible magnitude and velocity, rewarding those who position themselves correctly. While the technicals are overwhelmingly positive, we must remain aware of the broader context. A system that is losing control may not go down without a fight. There is a non-trivial possibility that we could see a desperate move to rescue the failing narrative. This could manifest as a demand-destroying event, a sudden shock to the system designed to scare market participants out of their positions and back into the perceived safety of cash. The form this might take is anyone's guess, but the motivation would be to halt the exposure of the system's deep-seated fragility that the rising metals prices represent. The truth that is breaking out is a simple one. The debt-based financial system, engineered over decades, is in the final stages of its collapse. The relentless rise in the price of gold, silver, and soon, platinum, is the most honest indicator of this reality. These are not speculative assets. They are the ultimate form of sound money, representing rarity, scarcity, and unique physical properties. They stand in stark contrast to the derivative proxy tokens and endlessly printed fiat currencies that form the foundation of the modern financial world. The market is choosing tangible value over abstract promises. It's crucial to differentiate between real assets and the digital facsimiles that have been promoted as their successors. While proponents of cryptocurrencies often frame them as a solution to the problems of the central banking system, it is vital to observe what the central banks themselves are doing. The institutions that control the global flow of capital are not accumulating digital tokens. Instead, the central banks of the semi-free world are buying physical gold at a historic pace, repatriating their holdings, and solidifying their balance sheets with the one asset that has maintained its value for millennia. This accumulation of gold by nation-states is a clear signal of a geopolitical and economic realignment. Countries that are not aligned with the Western financial powers are steadily de-dollarizing and building their reserves of an asset that cannot be devalued or sanctioned away with the flip of a switch. We can contrast this with the actions of Western nations, such as the United Kingdom under Gordon Brown, who famously sold the nation's gold reserves at the very bottom of the market around $256 an ounce. The divergence in strategy is telling, as one part of the world prepares for a new monetary reality while the other remains committed to the old, failing paradigm. The persistent bid under the gold market is a direct consequence of this institutional demand. It's a quiet but powerful force that continues to drive prices higher, day after day. This is the underlying trend that supports the entire precious metals complex. While the financial media may focus on fleeting narratives, the real story is told by the flow of physical metal. This is the foundation upon which the current breakout is built, a foundation of sound money reasserting its role in a world increasingly skeptical of fiat promises. Now let's examine the gold chart from a macro perspective to understand the sheer scale of the situation we are in. What you are witnessing is the graphical representation of a debt-based collapse happening in real time. This is the quickening phase that has been discussed for years. We are in the window where the decay of the debt-based system accelerates, and the mathematical certainty of its failure begins to manifest exponentially. As the value of debt and the currency it is denominated in goes straight down, the value of the thing that represents its inverse, gold, must, by definition, go straight up. This dynamic presents a tremendous opportunity within the crisis. For those who are correctly positioned, this is not a time for fear, but a time to understand the profound wealth transfer that is underway. By positioning in precious metals, you are effectively preserving your purchasing power while the rest of the world, denominated in fiat currency, is being sent into a financial abyss. In real terms, measured by what your money can actually buy, you become wealthier not by chasing speculative gains, but by simply holding the one asset that is maintaining its value against a collapsing system. To illustrate this, we can look at gold's performance when measured against official, and likely understated, inflation statistics like the CPI. Even using these manipulated figures, a powerful technical pattern emerges. An analysis of gold priced against the CPI reveals one of the largest HVF patterns ever seen. This structure triggered in the third quarter of 2024, a signal that was highlighted over a year ago as the start of the most significant move in the gold market of our lifetime. This was the moment the market warned that a historic debt and fiat-based collapse was not just a theory, but an active, ongoing process. The message from this massive chart pattern was clear and unambiguous: position in gold. While many were distracted by the siren song of a potential melt-up in equity markets, the gold chart was telling a different, more fundamental story. It was signaling that all other assets, when measured against the timeless value of gold, were in a state of decline. The nominal price of the S&P 500 might fluctuate, but in gold terms, it has been in a long-term downtrend. To focus on nominal gains in a debasing currency is to miss the larger, more important picture of real wealth preservation. The only melt-up that should concern a prudent investor is the one where gold's purchasing power remains stable, while everything else melts down against it. This is how relative wealth is built during a systemic collapse. You are not just preserving what you have. You are positioning yourself to capitalize on the repricing of all assets that will inevitably follow the failure of the current monetary system. This is a foundational event, an implosion of the entire financial structure. Worrying about the minor fluctuations of individual stocks is like being concerned with the color of the paint in one apartment, while the building's foundation is crumbling into a sinkhole. This is not a random market accident, it is a controlled demolition. The policies enacted by political leaders across the Western world have actively contributed to and accelerated this process. This is the culmination of a grand project designed to consolidate wealth and control, creating a society of renters who own nothing. The primary mechanism for this transfer of wealth is currency debasement. By destroying the value of your savings through inflation and financial repression, they systematically strip you of your economic power. The rising gold price is a direct, real-time measure of this ongoing theft. However, even within a system undergoing controlled demolition, there is still immense opportunity. Let's return to the CPI-adjusted gold chart. The macro upside HVF pattern on this chart suggests a potential for a move that is close to 5 times larger than the current level. While translating this directly to a dollar price is complex due to the variable of official inflation reporting, the core message is one of magnitude. We have only just passed the first major target in what is likely to be a multi-stage, multi-year advance. The bulk of the move is still ahead of us. Now let's apply this same rigorous technical analysis to the silver market, which presents an even more explosive opportunity. The silver chart features its own powerful HVF structure, even without adjusting for inflation. This pattern, once it fully breaks out of its multi-decade consolidation, points to a staggering price target of $330 per ounce. This is not a speculative fantasy. It is a price objective derived from the geometry of a highly reliable, long-term technical pattern. The journey to this target will be transformative for the silver market and for the entire financial system. This brings us to a critical message for anyone who is a physical bullion stacker. The strategy of slowly accumulating ounces, tube by tube or coin by coin, is a sound foundation for wealth preservation. However, in a period of such historic volatility and opportunity, it may not be enough. The system is being dismantled, and to truly secure your financial future, you may need to accelerate your accumulation. The coming bull market in precious metals offers a unique chance to do just that, by using the market's own momentum to dramatically increase your physical holdings. This is where the strategic use of trading comes into play. By learning to identify and trade these high-probability continuation structures, you can generate significant capital in the very fiat currency that is collapsing. You can then use these profits to acquire multiples of the physical metal you could have otherwise afforded. This is not about day trading or high-stress scalping. It is about position trading, identifying a major trend, establishing a position with defined risk, and letting the market do the work over weeks and months. This approach allows you to turn a small amount of capital into a pallet's worth of silver. The geopolitical reality is that wealth concentration in any single Western country carries significant risk. Diversification is no longer just about asset classes, it's about jurisdictions. Building substantial holdings of precious metals, stored in various secure locations around the world outside of the Western financial system, is becoming a crucial strategy for high-net-worth individuals and prudent investors alike. The profits generated from trading these macro trends can provide the very means to achieve this level of global diversification and security. The $330 price target for silver is a number that may seem unbelievable to many right now, but it is a mathematically derived objective from a pattern with an incredibly high probability of success. The larger the time frame of an HVF pattern, the more reliable its outcome tends to be, and the silver chart is presenting one of the largest such patterns in any market. The significance of this cannot be overstated. We are on the cusp of a breakout that is likely to cover a vast distance in a disproportionately short period of time. This is what makes the current moment so opportunistic for wealth building. We will be trading this macro move from an investor's standpoint, holding a core long position for the long term. Simultaneously, we will be identifying and capitalizing on smaller, lower timeframe continuation patterns all the way up. This dual approach, combining long-term investment with tactical trading, will be applied not just to silver, but to gold and platinum as well. This allows us to maximize our exposure to the primary trend, while actively compounding our gains along the way. It is important to manage expectations regarding the path of this ascent. Even the most powerful bull markets experience pullbacks. Silver is currently approaching a sensitive zone between $45 and $50, an area of significant historical resistance. It is plausible that we could see a rebuttal or a period of consolidation in this region. The market may need to make several attempts to decisively break through this ceiling. However, any pullback from this level is likely to be a prelude to an even more powerful move higher. Once silver clears the $50 hurdle and makes a new all-time high, the character of the market is likely to change dramatically. The move to triple-digit prices could happen with astonishing speed. Levels like $60, $70, or $80 may become mere academic footnotes in a rapid vertical ascent. This is the nature of price discovery in a market that has been artificially suppressed for decades and is suddenly liberated. It's in these moments of rapid, fast-moving breakouts that trading methodologies focused on capturing momentum with tight risk control truly shine. Let's quantify the potential move from here. If silver is currently trading around the $44 mark, a move to $330 represents a 7.5-fold increase in its dollar price. This is not just a reflection of silver's intrinsic value, but a stark indictment of the dollar's impending debasement. Such a move would be a clear signal that the control mechanisms used to manage the price for so long have completely and utterly failed. The physical demand from industrial, military, and investment sources will overwhelm the paper market, leading to a true price discovery. The authorities are aware of this dynamic. A silver price that begins to run uncontrollably towards $50 and beyond poses an existential threat to the narrative of a stable financial system. This is why the risk of a demand-destroying event is so high. They need a shock, a crisis, something to force the public to sell their assets and run to cash, thereby alleviating the upward pressure on precious metals. The foreplay for such an event could be the very price action we are seeing now, as the market moves closer to a critical breakout point. This breakout in precious metals will be accompanied by news that is unlikely to be positive, especially for those living in the United States, the United Kingdom, Europe, Canada, Australia, and New Zealand. These are the nations most deeply enmeshed in the debt-based fiat system, and they will be the most profoundly affected by its collapse. The warning sign is the divergence between the nominal value of assets like the stock market and their real value when measured in gold. The stock market is already correcting violently in gold terms, and when it begins to correct in nominal terms as well, we will be in a true depressionary collapse. This is the ultimate warning that the market is providing. The biggest setup in the financial world today is this macro upside HVF trading pattern in silver. It is a pattern that, based on a balance of probabilities, will carry the price through the $330 level. This implies a 750% increase from current levels, a move that will rewrite the financial landscape. It's a move that will seem expensive at every step of the way, yet in hindsight, every purchase will have been a bargain. The strategy, therefore, must be to continue accumulating. We have seen the beautiful cup and handle pattern break, a technical event that confirms the beginning of this new major uptrend. We traded it, we saw it, and it happened as anticipated. This is just the start. The larger HVF structure is now beginning to assert its influence, promising a move that will be both powerful and sustained. This is the one message to take away from today's analysis. You are in the early stages of one of the most significant bull markets in history. To navigate this environment effectively, it is essential to have the right tools and strategies. This includes access to reliable brokers for trading, such as Tickmill, where one can utilize leverage to amplify gains from these high-conviction setups. It also includes practical solutions for managing wealth, like multi-currency accounts from services such as Wise, which allow you to hold funds in stable currencies like the Swiss franc. These tools enable you to build a resilient financial fortress, capable of withstanding the storms to come. A crucial part of this strategy involves creating a seamless bridge between the financial markets and the world of physical assets. For instance, you can use a platform like Bullion Vault, funded from a multi-currency account, to easily buy and sell physical gold and silver. When you need liquidity, you can sell a small portion of your holdings and transfer the proceeds back to your Wise card for everyday spending. This creates a closed-loop system where you can live off your sound money assets without being fully exposed to the volatility of a single failing currency. Finally, a word on personal security. In a world of increasing financial surveillance and potential capital controls, how you hold your assets matters. Wearable gold in the form of jewelry is an age-old method of transporting wealth across borders discreetly. It is a personal item, not a financial instrument, which can be a critical distinction in times of crisis. This is just one of many practical steps one can take to ensure their wealth remains secure, mobile, and under their direct control, no matter what happens in the wider world. The future will belong to those who prepare today.